Welcome back to the channel and welcome back to another weekly price action review. Now, admittedly, this one is a late recording, and in all honesty, I wasn't planning to do it. The weekend had sort of got away from me, and I had done the analysis and the write-up, and then obviously, typically the follow-up would be the recording. And the weekend was getting away from me, and I kind of felt that, I'm not going to actually produce this. And then I kind of felt to myself that it's important to stick to my rules, stick to my processes and sub processes, and this is an integral part of my development as a trader, and therefore it's important for me to be accountable to myself and ensure that this video goes out. So it's going to be a quick one, because I think that with most traders it was pretty self-evident in terms of what the market was likely to do. Now, oftentimes when price behavior is indicative of this, it doesn't necessarily offer too many opportunities to profit depending on the type of trading strategy you have. So in my case, there wasn't much at all. There wasn't much available for me, but I still managed to take, in my opinion, a high probability trade and profit from the week. But I knew that opportunities were going to be very limited, and it was important for me to execute when my setup formed, in order for me to be able to take my pound of flesh from the market and then be happy and content with enough to sit on the sidelines and watch the remainder of the week play out. Were there any other opportunities? Maybe, maybe not. But that's not the real driver here. It's consistent application of one's model, and hopefully that will yield consistent profitability. So with that being said, I don't have a coffee to hand, which is disappointing, but let's get straight into this. So we're going to start on the weekly time frame. In fact, let's just take a little mooch at the monthly whilst we're here. So we had seen a monthly market structure shift here. So monthly market structure shift. So this monthly old low, market's traded down through that level on a closing basis. This candle will likely have weekly and daily imbalances in there. And so with no imbalance below the market, the likelihood was this old low monthly is the high time frame drawn liquidity. So if we drop down to the weekly time frame, what I was looking at was ultimately let's take, we don't need this week. There we go, we don't need that. Okay, so following last week's price action this week here, so I noted how the market traded up into this weekly bearish fair value gap and ultimately rejecting from that key price level. But if we look at the close, we closed prior to this old weekly low. So this indicated to me that we were likely to see a continuation of lower prices targeting this old low monthly, which we noted on the monthly time frame. Now, interestingly enough, look at these highs. You cannot tell me that the market, with everything that's going on and all the fear mongering and all of that sort of stuff about the stock market, you cannot tell me that price is not coming back up to purge these highs. So we had outlined this key price level as our high time frame drawn liquidity relative to the monthly time frame, because there was no inefficiencies below the marketplace prior to this old low monthly being hit. So I'd noted how old highs were being manipulated. So as you can see here, previous weekly high, market closes below. So old highs were being manipulated whilst old lows were being displaced through, supporting the idea of the weekly time frame order flow remaining bearish and seeking lower prices. So that was primary reason for targeting this. So let's go to the daily. A little bit more interesting. There we go. Okay. So really the week commenced here. Okay. Okay, so as detailed during the weekly time frame commentary, the anticipation was to see lower prices, with the market initially targeting this old low weekly, which we had noted, and then continuing to the high time frame drawn liquidity, which was this old low monthly. Okay. So as we can see is the market opened initially where it opened gapping down initially, because we know that the market opened here, so we gapped down, traded down below to purge the old low weekly, whilst also forming SMT with YM. And that set the stage for this rally higher to this daily bearish fair value gap. Okay, where we can obviously see that the market in turn did that. Now, one of the interesting things to note would be the market trading to this level, and why this level. And the likelihood is we've got, obviously we had this BPR, we had that, we have got this inversion fair value gap, but not too concerned about that. And we've got this volume imbalance here, and that is likely to be the primary reason to rebalance that volume imbalance. So I was monitoring the key price levels of this bearish fair value gap to determine whether I see one, any body closures within it, because body closures could indicate a continuation of higher prices, and two, whether we respect CE of this bearish daily fair value gap. So as you can see, there were no body closures inside of this fair value gap. Now, whilst NQ did close inside its fair value gap, it didn't dismiss or violate CE. So that indicated two things. One, ES was the weakest to seek lower prices, move to the downside, and two, that the market was finding resistance at this premium PD array to also to confirm lower prices. So the market then displaced lower, trading through the old low daily and continuing lower, aggressively trading down to the old low monthly. And also it's important to note that on Thursday we saw this gap down. This gap down to me indicated we're looking at speed to get down to here. As soon as we saw this gap down, it was very unlikely that we was going to see the market trade back up into here, rebalance this, and it could certainly have happened, but ultimately with this gap down, it was indicating that we are likely to see speed down to a key price level, which we did. Okay, so as you can see, we can see the SMT here, market retraces higher into this fair value gap, trades up into this volume imbalance here. We also have this bearish order block here, trades up into here, rejects, bodies of the candles are rejecting and not closing inside of this bearish fair value gap, indicating weakness. Market displaces lower, and then ultimately trades through the old low daily, trades through the old SMT, where significant liquidity would have built up here and then continues lower. Okay. So let's drop down to the H4. Bit more. I'm going to just take the low off the H4 just so we can see a little bit more. Bit messy here. Let me just expand that out a little bit. Okay. Right. So as we've noted on the weekly and daily time frame, order flows bearish. I had outlined also the high time frame drawn liquidity being this old low monthly. Okay, and we noted how the market traded down below the old low weekly where we saw high time frame SMT with YM coupled with this significant candle here indicating higher prices. Now once we saw this higher prices, in my notations during the week I was indicating the fact that although near term bullish price action would ensue up until the daily fair value gap, I had noted specifically on NQ how there was a lack of displacement, and that lack of displacement was indicating to me that we could be seeing a continuation of lower prices. Now, furthermore, with the majority of weekly candles, or the majority of candles in general, I would say high yielding must be over 90% of candles. It will typically have a wick, and so if the market is going to trade lower with the high time frame order flow still remaining bearish, then we could well see the manipulation to the upside before the move lower. Now, admittedly, I wasn't looking at all of that during price action, but I did center a lot of my focus around price being above the true week open to indicate that high probability shorts would likely occur from above this key price level. That's just one of my mandates when I'm framing a trade. So important to note the displacement higher on ES, as I said, whilst also forming the bearish fair value gap, the daily bearish fair value gap, before consolidating at the true week open, as we can see here. So we see this displacement higher, that we see this consolidation. The market then reprices higher to form the Tuesday high, which is this here. And we got this SMT here. And I believe that's where I managed to frame a trade short. Just in here, we had a cracking correlation here, and I was able to frame short here. Okay, from inside of the bearish daily fair value gap. Okay, and then as we head into Wednesday, the market continues higher, purges the Tuesday high, and we note a high time frame SMT sorry, where am I? Yeah, we note this high time frame SMT before the market begins to reprice lower. However, it fails to purge Tuesday's low, and then we get this move higher. Now, as far as I'm concerned, because there was, in my opinion, there was no real reason for this move higher. There was no cracking correlation. There was no nothing. That to me indicated manipulation, creating symmetrical lows, which, as you know, again, in terms of how I look at price, when we create symmetrical lows and highs, they are draws on liquidity. So this to me was manipulation now, because there was no logic, in my opinion, for this price to go higher. So the market ultimately trades higher, purges the highs, seeking the liquidity before rejecting. And displacing lower aggressively. Trading to and through previous day's low Q2. Trading through the previous low Q2 and ultimately through the old low daily. And ultimately the market just continues lower down to the old low monthly to close the week. Now it's important to note that this was a volatile week following the announcement of the Liberation Day in the US, where the uncertainty caused disruption in the markets, responding to a repricing lower. Right. So, and I believe that this is one of the reasons that meant that there was no logic in price moves from key price levels, as this ultimately classed as stock market manipulation. It was classed as stock market manipulation, driving the markets lower. So that's how I was viewing this move lower. And yes, there was probably some opportunities lower. Not for me. There was nothing that met any of my models to trade lower. But as I said, I had taken my pound of flesh here. We obviously had NFP as well on Friday, driving the markets lower. So it was an extremely volatile week, and one where patience would be rewarded, and it was important to sit on the sideline until things became clear. Okay, so I'm going to leave this one here. I'll just give you a quick look at the hourly chart, although not much really to see. As I said, this was my trade in here. So this move lower there, below the true week open, and then obviously we saw all of this and the market moves higher. But ultimately, that's my analysis for the week. Short and sort of sweet, but to the point. Again, it's important for you to document your takeaways. Very important to do that. And any additional information that's important to you in terms of how you can leverage improvements, how you can add things to your trading models and trading plans, and ultimately how you can focus on making the necessary improvements to push you forward towards being a consistent, profitable, and successful trader. So hopefully you enjoy this one. As I said, it was going to be short. Like I said, the market was like that, but there were opportunities as long as you remained patient, didn't push the boundaries. There was definitely opportunities. Certainly in the decline in price to the downside, there would have been many traders who would have managed to maximize opportunities. I was looking at this here, but ultimately, for me, it's not a model for me. Certainly when I look at ES and an NQ and stuff like that, it's not ultimately a model for me to engage with. Therefore, just bear with me 1 second, sorry. That a second. Just have a look at that. Yeah, so potentially during London there was this opportunity here, but then following that the market didn't provide any opportunities for me to ultimately engage with the market. In order to profit on the way down. So it is what it is. Happy with the week, happy with the week's performance. We go again this week we get ourselves sorted, making sure that we are initiating our trading routines, pre-market, post-market, and so on, and just making sure that you are prepared for what the market presents to you and you execute according to your plans and your rules. With that being said, going to leave this one here. Hopefully you've enjoyed, and guys, I'll catch you next week in the next one.